Pablo, good to see you. How you doing? How you been? First one in Pablo, as always. Let's go. Talk evening, Miles of CMF. Good to see you as well. How you doing? How you been? One love. Good to see you. How you doing? You're the first one in from YouTube, definitely. How you doing? One love. How was your weekend? Hi, Miles and everyone. Hope everyone is well. Let's go. One love. Hello, Miles. Hope you're well. T, good to see you. How you doing? How you been? I'm doing great. Hi, Miles. Susie, good to see you. Susie, how you doing? How you been? Hi, Miles. Hope your weekend was good. It was a busy weekend, I would have to say, but it was good. RTC, good to see you. How you doing? How you been? And I hope your weekend was good as well. Damn, lol. What's going on today? Talk. Good question. Today we're going to be talking about quite a mixture of news. We're going to talk about the US. We're going to talk about the EU. We're going to talk about China. We're going to talk about geopolitical tensions that are having a strain right now inside the market space, the crypto and the stock market. So a bit of a news essentially to go through. It's mostly geopolitical related and some partnership and announcement news, and obviously Ripple news to go through on tonight's live as always. Good on a night shift tonight, overtime for good stuff XRP. Let's go, one love. So before obviously we start on the news, let's just do the intro, disclaimer, and what we're going to talk about on tonight's live. And by that time, everyone's tuning in for the first part of this live. So welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much vital information for you to know about regarding the world completely transforming into a digital space. We also do Q&As on this live as well, which means if you do ever have any questions or even statements to essentially make, put it down to the comment section. More than happy to read them out or even help you out on your questions. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So, once again, welcome to the CMF Live. If you're new, if you're regular, let's go CMF. And by the way, thank you so much to everybody from the CMF who has already liked this live and essentially retweeted this live. I can see on X, so far we have 5 likes and 4 retweets. Honestly, thank you so much to everybody from the CMF who has already retweeted this live on X and liked it. CMF members, if you haven't liked and retweeted live on X and you're watching this on X right now, please retweet and live please retweet the live and like the live on X as well. Now, on tonight's live, we've got a mixture of news to go through. We're going to go through essentially geopolitical news in terms of the US, in terms of trades with China, in terms of the EU, in terms of even the United Kingdom. Also, some essentially partnership and announcement news, company news, public company news entering essentially into crypto space, partnership news, also Ripple news as always on tonight's live. But the first one we are going to be talking about is the Fed rates. Is the biggest discussion inside the crypto space, one of the biggest discussions inside the crypto space, which is, are we going to get essentially rate cuts? Are we not going to get rate cuts? Is Jerome Powell going to be resigning? Is he not going to be resigning? And so on. That is the first news we are going to be covering on tonight's live. But before we go through that news, let's go to the comment section before we go through the first news. So let's see where we're at. We were at here. Good evening, Miles and CMF. Manny, good to see you. How you doing, Manny? How you been? Good evening, Miles and CMF family. Funky brother, good to see you. How you doing? How you been? Hello, Miles and CMF. Comatous, good to see you. How you doing? How you been? Good day, Miles and CMF. Mike, let's go. Good to see you, brother. How you doing? How you been? Good evening, Miles and all CMF. JP, good to see you, brother. How you doing? How you been? Ray, what's up, Miles and CMF? Happy Monday. Hope all is well. Let's go, Ray. How you doing? How you been, brother? Good evening, Miles. How are things going? Things are going great. Going great, Callie. Good to see you. How you doing? How you been? Miles, what happened today as the markets are back down again? What are we going to break? When are we going to break out and really see some good news or good gains in your question? Well, we should be seeing some sort of essentially market movements. I mean, we are getting good news on regarding what's happening with essentially Trump and all the dealings that he's doing, the trade deals that are doing. That should have a positive impact on essentially the markets, the stock market and crypto, to be fairly honest. But it isn't. It feels like the crypto market is waiting for a much more substantial movement, or on the basis of, are we going to get a rate cut, or on the basis of essentially the Clarity Act getting its second voting. There's a lot of things still at play that, essentially in terms of regulations that we pass and trade deals that need to be done, and also essentially between, the rate cut situation, most importantly. Now, before we go through the first news, once again, let's just go inside the comment section first. Hi, brother. It's Kamal. I remember your company. Good to see you, Kamal. How you doing, brother? How you been? Now, first news on tonight's live is actually going to answer your question as well, Funky Brother, regarding the market movements and why the market is essentially a little bit down. So here it is. The Federal Open Market Committee is expected to maintain interest rates at its essentially July 2025 meeting. Despite former President Trump's calls for cuts and pressure on the Fed, essentially Chairman Jerome Powell, the decision holds significant implications for global markets, particularly cryptocurrencies, with potential impacts on asset pricing and investor sentiments. The Federal Open Committee market is expected to essentially keep interest rates steady at its upcoming July 2025 meeting. Despite calls from Trump and for the cuts, the Fed remains focused on data and market stability over political pressures. Chairman Jerome Powell leads the FOMC in essentially maintaining its current rate policy. Former President Donald Trump's push for rate cuts includes criticism of Powell's management and calls for his resignation over the ongoing Fed renovations. Now, there has been some discussions where apparently Trump doesn't want Jerome Powell to essentially resign, and he hasn't said those words, but we all know he has, and we stand by what Trump said. Jerome Powell either needs to do rate cuts and do his actual job, or essentially just quit. To be fairly honest, that's where I stand with Jerome Powell. I'm guessing that's where everybody else stands inside the crypto space as well. Over ongoing Fed renovations. Now, what economists, essentially UBS Global Research, noted, these comments have essentially broadened from focusing on interest rates to calls for Chair, essentially Jerome Powell, to resign over the handling of the ongoing $2.5 billion renovations of the Fed's essentially headquarters. Interest rate stability is crucial for financial markets. Investor confidence remains essentially contingent and on consistent monetary policies. A potential essentially rate change could shift US Treasury yields and influence global financial strategies. The decision impacts US dollars liquidity and risk sentiments, globally affecting major asset classes, including cryptocurrencies. And Ethereum essentially commonly benefits from rate cuts, showing essential potential for increased activity post-decisions. It's not just Ethereum essentially that essentially is, from rate cut decisions happening. XRP could do tremendously well as well. XLM could do very well. HBAR could do very well. Solana could do very well. A lot of crypto projects will start to move once we get rate cuts in. I can see Mr. Brown is saying talk about XRP. I just did. XRP will do very well as well when we get rate cuts. Don't say I never read that. Don't say I never help you out. Market participants express concerns of a potential political interference in Federal Reserve operations. The central bank's independence is critical to monetary policy's credibility, underscoring the significance of maintaining essentially a political stance. Simon Dangle, the head of fixed income macro strategies at Goldman Sachs Asset Management, emphasized Jerome Powell's aim is the press conference essentially will be to stand quiet, boring and balanced, and that's essentially partly because we're going to learn quite a lot in the next couple of months. Historical trends indicate a dovish shift could boost the digital asset market space, with Bitcoin and governance tokens showing positive momentum. Governance tokens, and also in terms of the projects that are going to do tremendously well on the regulations, XRP, XLM, XDC, HBAR, Solana, and so on. Once again, just mention XRP for you there. The outcome is contingent on the global economic data and evolving market dynamics. So, one, we still need the Fed to do some sort of rate cuts. There's still no announcements from the Fed of any sort of rate cuts. It's something that we need inside the market space to be able to move on, essentially forward. Two, either Jerome Powell essentially resigns, which is still on the table if they do find something on him on the $2.5 billion renovations of mismanaged funds. And three, Jerome Powell just stands still, which is what Goldman Sachs said. That Jerome Powell is just going to be standing still. It's going to be quite boring from his speech. Now, moving on essentially from the Fed report, which didn't really help the crypto market space or even the stock market, to be fairly honest. That's why, inside the crypto market right now, we're a bit staggered. We're not moving much as we should be doing. Now, PayPal. And there are other factors in play also in terms of essentially the global trade situations that are going on, the macro effects that are going on, geopolitical tensions that are going on. There's a lot of things happening around the world right now that's putting a strain on essentially the stock market and is weighing into the crypto market space, to be fairly honest. But all of that is not going to last too long anyways. Now, PayPal is what we're going to talk about next. So on the side that we do have, are we going to get rate cuts? Is this going to happen? Trade tensions and geopolitical tensions or whatever is all on one side. On the other side, there's a lot of things also happening in a positive aspect for the crypto space, which one of them essentially being PayPal. PayPal empowers US merchants with crypto payment options right now. PayPal launched Pay with Crypto, enabling US merchants to accept essentially cryptocurrencies and over 100 different types of cryptocurrencies directly through its platform, effectively essentially July 20th, 2025. Now, facilitating crypto essentially payments offers merchants a low transaction fees, attracts digital savvy consumers, reflecting essentially a significant trend towards inexclusive borderless commerce with potential positive market dynamics. PayPal has introduced a new feature allowing US merchants to accept payments in over 100 different types of cryptocurrencies. Led by CEO, essentially Alex Chris, PayPal's new initiative aims to facilitate international payment processes for businesses, crypto wallets enabling seamless integrations. Alex also remarked by saying businesses of all sizes face incredible pressure from growing globally, with increased costs for accepting international payments to complex integrations. Today, we're removing those barriers and helping every business of any size inside the United States or globally to be able to accept cryptocurrencies as a form of a payment. The idea of essentially crypto day by day being essentially seen as a credible payment essentially option is brilliant to see, because it adds that credibility to the crypto space and removes the title of Ponzi scheme and scams from the crypto space and makes it look, like a legal tender, which is what we like to see. The introduction is expected to affect the cryptocurrency market spaces by increasing transaction volumes and enhancing merchant adoptions. PayPal stablecoin PYUSD essentially offers a 4% annual reward, which is better than what banks essentially give to people if they hold their money with them. The essentially encouraging rotation within the platform. The financial implications include a competitive transaction fee of 0.99%. Of course, as PayPal, as a business, it has to make some fee money for the first year, rising to 1.5%, potentially attracting merchants seeking lower cost alternatives to traditional card fees. Merchants can integrate via essentially major platforms, potentially increasing digital currency usage for commercial essentially transactions. The collaboration also with essentially Pfizer VR aims toward expanded stablecoin merchants, enhancing PayPal's market reach. Historical trends also suggest that potential growth in crypto wallet activity and merchant inflows. However, exact on-chain metrics remain undisclosed, necessitating further data to evaluate the long-term effects on digital commerce. Now, we know for a fact that in the EU, according to the data that came out about 2 months ago, that there's a tremendous amount of essentially cryptocurrency buzz happening in the EU. And in terms of even people using cryptocurrencies as everyday transactions, than world using fiat in the EU, especially in countries like Romania, came up essentially as number one, or Bulgaria also on the list of number one as well in the EU. But honestly, this is something great because it gives every business, essentially every consumer, so on, to be able to use cryptocurrencies as transactions. Also, if you are somebody right now that is watching this live and you do own a business and you want to accept cryptocurrencies, but it all seems too complicated for your business to be accepting cryptocurrencies, well, PayPal just made it very simple. You can accept up to 100 different types of cryptocurrencies. I think if you do have a business, it's something to definitely look into. The world is going digital rapidly, and why not essentially accept cryptocurrencies? Now, it also adds quite a lot of liquidity to the crypto space as well. Now, Interactive essentially brokers considers launching its own stablecoin aimed the US crypto shaker. So because the US has passed essentially the Genius Act, which is regarding stablecoins and making them some sort of a legal tender, it's kind of given a green card to any bank or establishment to launch their own essentially stablecoins. And Interactive Brokers is now essentially thinking about launching their own stablecoins inside the United States. So here it is. Chairman Thomas revealed that the firm is evaluating stablecoin options to essentially simplify around-the-clock crypto transactions. The idea aligns with broader industry trends and regulatory developments, especially as the Genius Act, recently signed by President Trump, opens the door for more essentially compliant blockchain activity. While Interactive Brokers already supports crypto trading via essentially partnerships with Paxos and Zero Hash, the addition of a native essentially stablecoin will put it in direct competition with firms like Robinhood, which recently rolled out its own USD-pegged token. He also went on to say, he noted that even if Interactive Brokers doesn't issue its own coin, it may still allow clients to use essentially credible third-party stablecoins for essentially fund accounting, which I'm guessing they're going to be accepting USDT, USDC, and RLUSD, even PYUSD from PayPal. Though skeptical of crypto's long-term value, he acknowledged its growing utility in financial infrastructure. It's true. The CEO of essentially Interactive Brokers was very skeptic when it came to cryptocurrencies. He saw it as a Ponzi scheme or some sort of a scam that people would just lose their money into. And as time obviously went by, he decided to come to the conclusion that, whether he thinks it might be a Ponzi scheme or a scam or whatever, it's actually looking like it's going to be on the other end of the stick, which is regulations are passing worldwide for cryptocurrencies, especially with the United States accepting essentially stablecoins as some sort of legal tender. It's something that, no longer a CEO or an executive board member or a CTO can just, dismiss anymore. Cryptocurrencies have come to a stage where It's just difficult for CEOs that even hated cryptocurrencies to dismiss the idea anymore, because we're just on a different level now when it comes to cryptocurrencies. The market might not react essentially to what I'm saying right now, showing essentially how the market is a little bit down, 1 to 2%. But on general truth, we've come to a stage where cryptocurrencies can't be dismissed anymore by CEOs and executive board members. And, you know, these are words essentially of the CEO and essentially the chairman of essentially Interactive Brokers, which is quite a big firm, to be fairly honest. Now, quantum solutions is what we're going to talk about next. But before we talk about quantum solutions and their essentially newest investment inside the crypto space, let's go inside the comment section first, and then we go straight into the next news. As I said previously, this is live, just like usual, which means if you do have any comments or questions, put it down inside the comment section. More than happy to help you out. So let's go inside the comment section first, and then we go straight into the next news. Okay, we were here. Market is not too bad. I agree. The market is not too bad. I mean, the market is not like 20% down, 50% down, and so on. It's only 1 or 2% down, which is perfectly fine for a market that, you know, is trying to figure out this next step, which is going more into regulations and this institutional wave we're going to be having. Good evening, Miles and CMF. Lena, good to see you. How you doing? How you been? Hi, Miles and CMF. Stormy, good to see you. How you doing? How you been? Hello, Miles and family. I hope that everyone had a good day. Let's go, Scott. How you doing, brother? Hello, my friend and fellow family members. Let's go, Scott. Share the live. Let's go, Scott. Any news on Beam and XLM? No news so far on XLM or Beam specifically, but we do have other news regarding cryptocurrencies and even Ripple on tonight's live as well, as always. Good evening, Miles and CMF. Free and forever. Good to see you. How you doing? How you been? Carl says, "Hi, Miles and CMF family. It is time to turn on my. It is time to turn on my CMF TV." For facts news. Miles, what do you think about XRP, which lost 10% last time? It is a correction, or are we going to lose the rust of innovators? Now, regarding essentially XRP or any other crypto project out there that, you know, essentially these past few days have had some sort of a downtrend, it's just a market correction, plus always the manipulation factor is always at play. But there's also a lot of things happening around the world in terms of trade deals that are going on. There's also the rate cuts that we're supposed to be getting, which we still haven't got. There's also the factor that the market went tremendously up and it needed some sort of a correction, but also the factor essentially of manipulation is always at play in that sense. I mean, if you put all those charts together and remove the tickers, it will look like a photocopy. But no, the rust of innovators, essentially, you know, we're not losing innovators whatsoever inside the crypto space. In fact, we're going more into cryptocurrencies. Again, the market might not be showing that to you, even though we're only down 1 to 2%, which is nothing inside the crypto space if you're down 1 to 2% in stocks. 1 to 2% makes it to the headlines of breaking news on Bloomberg. But on cryptocurrencies, 1 to 2% down doesn't make it any news, to be fairly honest. But we're going more inside of cryptocurrencies than ever before. We have regulations happening globally inside, which we're going to go through on tonight's live as well. South Korea has just passed, essentially, just give you a bit of a segment. South Korea has also just passed stablecoin regulations as well. They're following the footsteps of the United States. And South Korea is big on cryptocurrencies. And the number one token that they do end up buying is XRP. XRP actually outshines Bitcoin and Ethereum in Upbit exchange multiple times in South Korea. South Korea has said before that they're following America's footsteps. Whatever regulations they're pretty much passing is what South Korea is looking into to essentially pass. So I was talking about the trust of investors. No, the trust hasn't been lost whatsoever. I mean, let's not forget that Ripple still holds the most amount of licensings, has the tremendous amount of partnerships with banks and institutions globally. It also essentially has applied for a bank control license to get XRP into a Fed account. All these things are still in play. Nothing has changed whatsoever. Just because the market is down 1 to 2%, there's nothing to worry about. Everything is still in play. Investors haven't lost trust whatsoever in XRP or Ripple or inside the crypto space. We have more essentially institutions inside the crypto space than ever before. Banks are more involved inside the crypto space than ever before. Governments are more involved inside the crypto space than ever before. So there's nothing to worry about whatsoever. We're actually heading to a great path inside the crypto space. Give it a few days, the market will bounce back. It's only 1 to 2% down because of 1, the Fed situation, 2, geopolitical tensions, 3, the rate cut situation, and 4, correction plus manipulation sector. Now, but no one's lost essentially investor confidence whatsoever. And also going back on what Morgan Stanley said as well, let's not forget Morgan Stanley did say that there are essentially more that the old whales are being replaced by institutional whales right now, which is exactly what's happening. You see, the old whales inside the crypto space will essentially, sell and create some manipulation situations, and the new whales that are buying them back up are actually institutional whales. Now, Quantum Solutions. On the topic of essentially institutions, Quantum Solutions plans to invest $354 million on Bitcoin reserves, aims to join the top 10 global holders of Bitcoin. The cryptocurrency reserve will be managed by a company, essentially subsidiary, GPT Palos Studios Limited. The global crypto asset market has been expanding, essentially with Bitcoin increasingly recognized for its nature as digital gold. Now, there is also a growing trend among publicly listed companies and institutional investors, especially overseas, to hold Bitcoin as a financial reserve asset, drawing attention essentially as a medium to long-term hedge against inflation and a means of essentially preserving the value, the company said in a release. The decision to create a Bitcoin treasury was approved by the board of directors of Quantum Solutions on July 23, 2025. Crypto asset operations will be handled by GPT Palos Studios Limited. As a part of this strategy, the company does intend to use up to $10 billion of onboard via essentially a loan to acquire Bitcoins. In total, Quantum Solutions plans to purchase up to 3,000 Bitcoins, approximately $354 million over the next 12 months. The release also emphasizes that until now, neither Quantum Solutions nor its affiliates had held any crypto assets whatsoever on their balance sheets. The organization explained the transitions essentially as a response to concerns about the inflation and in line with global trend. In order to effectively manage excess funds generated by existing businesses, diversify our essentially asset portfolios to strengthen our financial basis and preserve essentially the value in the medium to long term and reduce currency risk, we have decided to add Bitcoin to our reserve assets, the company said. If Quantum Solutions follows through with this plan, it will be among the top 10 largest holders of Bitcoin as of today. Interestingly, Quantum Solutions shares initially fell from 555 yen to 468 yen following the news, but lately partially recovered. It's the first time ever that any public company announcing creating a Bitcoin treasury, their stocks go down instead of going up. But they're starting to recover on their stock side. But yeah, another company has decided to join the Bitcoin bandwagon of adding Bitcoin to their portfolios. This one's aiming to become a top 10 holder instantly. Now, moving on from that to the SEC. The SEC started moving incredibly fast when Trump became president on closing crypto cases one by one, on trying to make the crypto space essentially more tangible, bring more investors inside the United States, and so on. It was so positive. Somewhere down the line, the SEC started slowing down for very oddly reasons. One of them being passing essentially ETFs. Why did they decide to slow down? Most people, the thing is, the SEC said they're trying to create some sort of a comprehensive method for ETF applications to be passed through at a much more faster rate. So until they essentially bring this method out, they're going to be slowing down applications. And then they're going to be, essentially fast tracking applications with their new ETF method, which is just stupid. How about you just pass the ones that are still lying on your desk for the past 6 months? How about you pass one of those ETFs? That maybe could fast track it even faster than waiting for an ETF method for then those applications to be refiled onto that new method inside the SEC so they can be passed as an ETF. It's just utterly stupid, to be fairly honest. So the SEC, essentially Securities and Exchange Commission, delayed its decision on, for example, today on Truth Social's Bitcoin ETF. By the way, Bitcoin already has an ETF, so there's no reason for a Truth Social's Bitcoin ETF to be essentially extended. What are they trying to look into more into Bitcoin? They've essentially approved every Bitcoin ETF there is. So why not reject, but essentially extend and say, no, we need to think about a Bitcoin ETF from Trump Truth Social. On what reason exactly? Nobody knows. The US SEC essentially delayed its decision on the Truth Social's Bitcoin ETF associated with Trump's media and technology group until September 18th, 2025, impacting potential investment shifts. The delay reflects ongoing scrutiny of crypto ETFs and influences of market dynamics, particularly for Bitcoin and Ethereum, and rising interest in diversified crypto investment products. You see, there's also the side of, is somebody telling the SEC still what actions to take? Is the SEC slowing down so that the current Bitcoin ETFs and Ethereum ETFs keep on climbing the ranks, while the other ETFs, like essentially alternative Bitcoin ETFs from Trump's family, or essentially XRP ETFs, XLM ETFs, HBAR ETFs, Solana ETFs, and so on, don't pass through for now, just so that money could pile up for the existing Bitcoin ETFs and Ethereum ETFs. But then they're stupid, because in the long run, money will start to exit from those ETFs and go into alternative ETFs once they get accepted anyways. The US SEC has officially essentially delayed its decision on Truth Social Bitcoin ETFs, pushing the review essentially to September 18, 2025. This involves the Trump Media and Technology Group aiming for a dual Bitcoin and Ethereum fund. Trump Media essentially and Technology Group, TMTG, led by Donald Trump, is behind the ETF. Yorkville American Digital serves as the fund sponsor, while Forest Dax Trust Company acts as the custodian. The delay aligns with their ETF applications. The SEC's decision impacts cryptocurrency markets of Bitcoin and Ether as essentially major assets involved. Staking and redemption processes face scrutiny and regulatory essentially uncertainties. The SEC said it was extending the review period for Truth Social's Bitcoin ETF to allow sufficient time to consider the proposed rule change and the issues raised therein. What issues exactly? You already have Bitcoin ETFs passed. Why not pass a Trump Bitcoin ETF? Is it because the Democratic Party is telling essentially the SEC what to do, as always? Or has the SEC finally, under a new essential leader, has its own mindset? Financial implications remain significant as market participants observe the SEC's ongoing reviews. There is a focus on whether these ETFs will eventually receive approval. Historically, the SEC has extended ETF review periods to address technical concerns. The current situation follows essentially prior delays and market inflows driven by past New York ACRA approvals, New York Stock Exchange ACRA approvals. Potential outcomes include shifts in investment patterns and regulatory frameworks. Data trends reveal ongoing market adjustments as investors anticipate changes in crypto ETFs accessibility. Honestly, the SEC is wasting everybody's time. 1, drop the Ripple case because you have nothing to attach yourself to. 2, the ETFs on your desk have been sitting there. Even some of them have been sitting there since Gary Gensler was in power, essentially as the chairman of the SEC. And now we have the essential in between. We had Mark as the acting SEC chairman, which Mark actually did tremendous work, to be fairly honest, as an acting SEC chairman. And then after that, we have essentially the main person that's in charge of the SEC, which for some oddly reason, who's moving at the snail's pace, trying to pass ETFs, even Bitcoin ETFs, which makes zero sense. Why do you need sufficient amount of time to see if you could pass a Bitcoin ETF? You already passed the Bitcoin ETF. You don't know what a Bitcoin ETF is, but you passed it. You passed 10 of them, to be fairly honest. The SEC is just moving incredibly weird right now, and they should get their act together fast. Now, Democrats. Democratic senators raise concerns. Ironically, you could have some relevance to the SEC as well. The Democratic senators are raising concerns over FHFA crypto order. If you're wondering to yourself, what is that? Well, it's regarding mortgages, lending, borrowing, and cryptocurrencies getting involved in that sector. The Democrats are not happy. Honestly, Democrats are like big children. They cry about everything. They never stand on the right side of history for some odd reason. Senate Democrats are sounding the alarm over a new FHFA directive that will allow crypto to be considered in mortgage loan risk assessments. A coalition of high-ranking Senate Democrats is pushing back against the Federal Housing Agency. The FHFA director William recent order that would allow mortgage lenders to utilize unconverted crypto into underwriting process, according to a new letter sent to the investment firm's founder. Every step cryptocurrencies take inside the financial sector, the Democrats quickly send a letter. Please slow it down. Please don't let it happen. I honestly don't know, if the Democratic Party should be even named the Democratic Party or just... According to a July 25th letter, U.S. lawmakers Jeff Merkley, Elizabeth Warren, the usual suspects, Bernie Sanders were an absolute waste of space, Chris Von Hollen, and Mays Henry could introduce unnecessary risk to consumers. for essentially and pose serious safety and soundness concerns for the US housing and financial markets. To the extent that historical volatility and liquidity persists even as a market essentially matures, borrowing essentially users using cryptocurrencies faces an increased risk that essentially they may not be able to exit a crypto position and convert to cash at a price that will allow them to buffer against essentially risk of mortgage default. The senator state. Crypto is also subject to heightened risk of loss due to scams, cyber essentially hacks, or physical theft, which could leave essentially homeowners vulnerable to losing their crypto assets with little hope of recovery, they added. So they're basically saying that if somebody has cryptocurrencies, let's just say, for example, and they get a mortgage using cryptocurrencies, and then one day a scammer or a hacker essentially empties their wallet through essentially a hack, and they can no longer essentially pay for that property. What happens next? The same could be said if somebody gets a mortgage and their business goes bankrupt. What are they going to do? What usually happens, the bank will take the property. So the letter comes shortly after essentially Putin's June 25 order directing Fannie Mae essentially and Freddie Mac to prepare a essentially proposal that will consider cryptocurrencies as an investment for reserves in essentially their respective single-family mortgage loans risk assessment without essentially first being converted to US dollars. Prominents argue that the shift supports growing mainstream crypto adoption aimed at broader regulatory changes inside the United States. Former Binance CEO CZ also had an opinion on this as well. He praised the move. In a post on X, essentially, he said, "This is great to see, and BTC counts as an asset for mortgage as well." Under that, obviously, certain other cryptocurrencies as well. However, critics warn that the digital assets-focused policies could do more harm than good. The critics, by the way, are all Elizabeth Warren's best friends. Expanding underwriting essential criteria to include the consideration of unconverted cryptocurrency assets that could pose risk to stability of housing markets and the financial system, the senator concluded. So, they're trying to essentially get you to be able to spend your cryptocurrencies on getting a mortgage or borrowing against the lending and borrowing services and mortgage services, which is a brilliant idea, which adds more credibility to the crypto space. The Democratic Party, as always, throwing a tantrum for anything positive for the United States, to be fairly honest, or for US citizens, don't like the idea of cryptocurrencies and mortgages being involved whatsoever, because they're saying if somebody gets a mortgage and then their wallet gets hacked, they won't be able to afford their crypto mortgages anymore. Same thing could be said if someone owned a business and gets a mortgage and their business goes bankrupt. What are they going to do using fiat? Or if someone has a job and loses their job and can't afford to pay their mortgage. It's a stupid argument to begin with essentially, but to be fairly honest, the argument is coming from Senator Elizabeth Warren. She's not the most brightest bulb, to be fairly honest. Now, US and China relations is what we're going to talk about next, which is also having a stray on the crypto market and the stock market. Quite a bit more on the stock market than it ever is inside crypto markets. But here it is. US trade, essentially US and China trade relations, unveiling the pivotal impact on essentially global markets that are going on right now. In a intricate dance of global diplomacy, even as essentially a seemingly simple announcement can carry significant weight. Recently, Walter essentially Bloomberg on X reported that US and China trade discussions held in Stockholm concluded for the day, citing a source familiar with the talks. Right now, the US has had conversations with the EU, which we're going to talk about on tonight's live, and the impact it's going to be having on the crypto market space. The US is also having trade talks right now with China and even Russia, and a few other countries out there as well, which, if it's a positive outcome from all those trade talks, the stock market can move on, and so can the crypto space. While this might essentially sound like a routine, essentially procedural update, it's a tiny thread in the vast, complex, essentially, of US and China relations right now. A relationship that profoundly influences not just geopolitical landscapes, but also the volatile world of cryptocurrencies. For crypto enthusiasts and investors, essentially understanding the nuance of these high-level stakes and interactions is absolutely crucial. So, the economic independence between the United States and China is immense right now. Together, they represent a significant portion of the global GDP, trade, and consumption. Now, their bilateral trade volume alone runs into hundreds of billions of dollars annually. This deep integration means that any shift in their relations sends tumors across the globe inside the market space. So here are some key reasons why their interactions are so impactful towards the crypto market space and the stock market whenever the US and China go back and forward. Global supply chains. Both nations are integral to global supply chains from manufacturing electronics to producing pharmaceuticals. Disruptions or essentially due to trade policies can lead to shortages, price hikes, and manufacturing essentially shifts worldwide. Economic growth, the health of both the US and Chinese economies directly essentially affects the global economic growth. Trade disputes can dampen essentially consumer and business confidence and slow down growth. Technological supremacy, a significant essentially part of the current tensions revolves around technological leaderships, particularly in areas like AI right now and semiconductors, and policies restricting tech transfers or essentially market access have profound implications for global essential innovation and competition. Financial markets, major policy announcements or escalations in US trade relations can trigger significant volatility in global stock markets, bond yields, and currency exchange rates. Essentially, geopolitical influence beyond economics, their relationship is a cornerstone of global geopolitics and essentially influencing everything from climate change initiatives to regional conflicts. While cryptocurrencies essentially often march to their own beat, they are not entirely immune to macroeconomic essentially and geopolitical currents shaped by the US essentially trade relations. The crypto market, despite its decentralized nature, is increasingly influenced by broader investor sentiments and liquidity trends. So here's a little breakdown on that matter. Risk on risk off dynamics, like tech stocks, cryptocurrencies, are often perceived as a risk on asset. When global trade tensions escalate, leading to a general risk off environment, investors tend to pull back from speculative assets, which in this case sometimes still does remain to be cryptocurrencies. Sorry about that. Which essentially can lead to sell-offs in crypto markets. Periods of de-escalation or optimism can also fuel rallies in that moment as well. Inflation pressures and hedges. Trade wars can disrupt supply chains, potentially leading to inflationary essentially pressures. And essentially, while some argue that Bitcoin can act as an inflation hedge, the immediate reaction to inflation concerns might be flight to traditional safe havens, or even essentially tightening a monetary policy, both which can negatively impact the crypto market space. The argument that obviously the old age argument that Bitcoin is a hedge against essentially these types of scenarios. Sometimes Bitcoin plays the role of a risk off asset, and sometimes in these types of scenarios, Bitcoin plays the role of a risk on asset, to be fairly honest. Digital currency race, the competition between the US and China extends to realms of central bank digital currencies, CBDCs. China's rapid developments of the digital yuan puts pressure on the US to explore its own digital currency. The progress or setbacks in these national essentially digital currency initiatives, often influenced by the broader trade and tech rivalry that's going on, could shape the future of regulatory landscapes for private cryptocurrencies. In other words, the US and China going head to head might not be such a bad thing afterwards, because the US, China, just like the US, is trying to essentially get ahead in this digital world. Every country is trying to aim for that, digital world that we're heading towards. But China is obviously well above certain countries, and they're very kept quiet on their movements inside the digital space, to be fairly honest. But the more the US essentially is pushing for crypto regulations and making the capital of cryptocurrencies and the capital of AI and so on, the more China is going for that same push, which eventually will be a tremendous amount of liquidity entering the crypto market space. Now, we've also had essentially familiar sources from China come out and say that Chinese banks or essentially Chinese institutions are right now discussing with the Chinese government on opening the doors to cryptocurrencies, which will bring tremendous amount of liquidity to the table. We are talking about essentially one of the biggest market spaces in the world. Opening its doors to cryptocurrencies once again will bring so much liquidity to essentially the table. So the more the US essentially is pushing for these regulations and scenarios for cryptocurrencies, become capital cryptocurrencies, China's on the verge to doing that also in a different way. But again, all we care about is liquidity, to be fairly honest. So the regulatory landscape, indirectly, the ongoing streak essentially completions could influence domestic regulatory essentially approaches to crypto. So it's not a bad thing China and the US going, headbutting each other right now, because they're both trying to become number one in the digital world. Both nations are grappling how to regulate digital assets right now, and their approaches might be subtle, shaped by the desire to maintain economic or technological advantages. For instance, China essentially restricts domestic, essentially, primarily domestic, has global implications for the crypto industry. Geopolitical hedging, essentially, in a scenario of extreme geopolitical tensions or financial instability stemming from trade conflicts, and some individuals and entities might turn to cryptocurrencies as a means to essentially go around this in terms of traditional financial systems or capital controls, viewing them as neutral and borderless alternatives. In other words, the simplest way to put it, as the US and China were headbutting each other and the doors still remained a little bit closed on China's side, it's still opening the door to liquidity from China's side as well, because the more essentially that China remains closed to cryptocurrencies or any other country out there, the retail section and the institutions are trying to go around it by using cryptocurrencies to get away from that restrictive side of their own governments. So either way, it's coming out good. Understanding these restricted connections is vital for making informed decisions in the volatile crypto space. The more intertwined the global economy becomes, the more essentially even seemingly independent markets like crypto are to major geopolitical shifts. But the best part, look, the one thing that I've said for the longest time we need inside the crypto space is rules and regulations. The faster we get rules and regulations, the faster we could go into utility, the faster a lot of crypto projects can decouple themselves from Bitcoin's footsteps. XRP, XLM, XDC, HBOS, Solana, Cardano. There's a lot of crypto projects that need to decouple themselves from Bitcoin. The faster we get regulations, the faster that happens. So far, we have one regulation fully passed, signed by Donald Trump. 2 more regulations going to be signed by Donald Trump, which is the Clarity Act, which got its first vote as a positive, massive positive. Second vote needs to come from the Senate, and then it's signed into law. Same goes for the anti-CBDC one as well, which was the Fed can't create it, but somebody else can. But yeah, honestly, the faster we get regulations, the faster we can move from all of this. And that it's, you know, it seems like there are obviously that's going to be happening this year as well in terms of more regulations are on the book. I mean, you know, it's Trump. He says it, he does it. Now, before we talk about the next news on tonight's live, which is coming out of Japan, let's go inside the comment section first and we go straight into the next news. As I said previously, this is live, just like usual, which means if you do have any questions or statements, put it down inside the comment section. I'm more than happy to read them out and give you a response. Now, let's see where we're at inside the comment section before we go through the next news, which is coming out of Japan right now. Let's see where we're at. We were at here, I think. Or we can see, so how you doing? Good evening, Miles, the CMF. How you been? How's things? So I was talking about, yeah, okay, I read that one as well. Shared live, yeah, okay, I was here. Good evening, all. Curtis, good to see you. How you doing, brother? How you been? Evening, Miles, and family. Ian, good to see you. How you doing? How you been? Hi, Miles. When can we expect some real price moves? Johnny, pretty soon. All facts. Let's go, Ray. Carl says, I'm really focused on understanding how to value crypto assets. I'm also looking at XRP's potential in lending and borrowing markets. Have you heard about crypto landlords loan and the LTV ratios? No, I haven't, Carl. I'll be very honest. There are also, just to add on top of that, what Carl has said, I haven't checked that one particularly out, crypto landlord loan and essentially LTV ratios. I haven't checked that one out in any sort of way, so I'm not going to give a response on that. But on the topic of crypto loans, if you are thinking about doing essentially getting a crypto loan, borrowing and lending services inside the crypto space, you want to get involved with that and you use your crypto assets as collateral, please make sure, obviously not financial advice in any sort of a way, but please make sure wherever you get crypto assistance from an institution, whatever institution may be, please make sure they have licensing, that they're fully licensed, so that later on, if you're using that particular institution essentially as a custodian, or essentially, you know, using to store your cryptocurrencies to be used as collateral for lending and borrowing services or mortgage services, please make sure that that platform is fully licensed and then not operating in any sort of gray areas. The reason why I'm mentioning this is because there are crypto influencers. I'm not going to name no one because we live in a different time right now. If you try to name drop someone for their, you know, bad behavior inside the crypto space, then you get sued. It's not like the olden times where people just have a face-to-face confrontation. You know, people these days, they just tend to sue. So on that topic, I'm not going to mention any names, but I've seen quite a bit of crypto influencers creating these lending and borrowing companies and telling the crypto space to come to their company and, you know, store their cryptocurrencies, and they'll help them to, you know, create a family trust or create a LLP or create a this and that and so on. Please be aware of any crypto influencer with zero background in finance and has any sort of licensing to be able to operate on that term. Please be aware. Don't just go to these crypto influencers thinking, you know, that one day they won't just turn their back on you, because they will. We've seen that too many. often. I've said this a million times and I'll say it again, honestly. Stay away from crypto influencers that just stay away from crypto influencers that offer you services for money. If a crypto influencer is telling you, they can help you create a family trust. If a crypto influencer is telling you they can help you create an LLP company, if there's a crypto influencer out there telling you they can help you with your borrowing service, your lending service, your mortgage services, stay away from them. There's a high chance of a 99.9% scam later on, even in some cases. Or there's a high chance that they don't have the proper licensing, and whatever company they created to take money from you doesn't have the proper licensing, which means it's operating in a gray area, which means if their company ever gets investigated, then so will essentially your assets will be essentially, stuck in a vault somewhere by the FBI until they release it back to you in 5 years' time. So this is why it's very important that if you're thinking about doing lending services, borrowing services, mortgage services, you want to do something with your cryptocurrencies, please make sure it's an established firm, for example, like Standard Chartered Bank, for example, or even Nexo essentially does have the proper license, to be fairly honest. Or you could go to essentially HSBC Bank, for example. There's a lot of well-established essentially firms out there, or banks that can assist you with these types of services. You don't need to go to a crypto influencer on X or on TikTok to do lending, borrowing, and mortgage services. Please stay away from these morons inside the crypto space. They're only after your money. And even if they're nice people, they're not after your money, and they're genuinely trying to create you essentially a family trust or LP company or anything inside the crypto space, most likely they don't have the proper licensing, which means their company will get investigated somewhere down the line, and then you will be at fault for losing your cryptocurrencies in an FBI investigation. Everybody remember Link2Co? Half the crypto space was so proud of Link2Co. Everybody remember those times? Majority of crypto influencers was sponsored by Link2Co. Link2Co badges all over their t-shirts and their podcast channels and so on. Everybody remember Link2Co? Remember how south Link2Co went? Same thing can happen if you're going to crypto influencers to open up you family trusts or LLP companies. Stay away from influencers like that. Don't let what happened to people who got involved in Link2Co to you. Go to established banks or established firms if you want to do anything with your cryptocurrencies. Not financial advice in any sort of way at all. But stay away from crypto influencers that are trying to offer you services to get your crypto money out of you. Now, even Ripple, if I'm not mistaken, is going to be offering some sort of services, which is brilliant. You go to Ripple if you have XRP. That makes more sense than going to crypto influencers. So don't let what happened to Link2Co happen to you. Now, when I told people about Link2Co day one, 2 years ago, I told people to stay away from Link2Co. They sold imaginary stocks to people, which is exactly what I said they're doing 2 years ago as well. Now, thanks so much, Miles, for your advice. No problem, Carl, anytime. Let's go to the next news on tonight's live, which is regarding Mitsubishi, not the manufacturer, the other company. Mitsubishi UFG Financial Group is tokenizing Osaka Skyscraper right now. They haven't chosen, essentially, as far as we're aware, that what blockchain is going to be behind it, but it's great to see more tokenization happening inside the real estate sector right now. It again adds credibility towards the crypto space. So more companies will come forward, so tokenizing essentially properties. And the blockchains that get chosen, well, that's where the liquidity is going to go to. So here it is. MUFG announced plans to tokenize real estate in Osaka, leveraging blockchain for institutional and retail investors. The initiative underscores Japan's push towards asset tokenizations without directly impacting major blockchain markets like Ethereum or BTC. Mitsubishi UFG Financial Group is set to tokenize real estate, starting with a high-rise essentially in Osaka, valued at essentially over 100 billion yen, which is roughly about $681 million. This digital asset initiative aims to increase institutional essentially and retail investor access. Led by Mitsubishi UFG Trust and Banking Corporations, MUFG will utilize the prominent platform for compliance and ownership tracking. This effort marks a significant step in blockchain-enabled asset management for Japanese markets. The initiative allows investors to engage with essentially property assets via tokenized securities. Japan's essentially ODX marketplace will host these transactions through the market and is still developing essentially with limited secondary liquidity. Real estate investment also trust RETI mechanism will support institutional partnerships, notably among larger essentially life issuers. The tokenization program remains separate from essentially traditional cryptocurrencies. With Japan's progressive approach to digital asset frameworks, MUFG strategy aligns with recent regulatory trends favoring tokenization right now. The Japanese essentially market has historically seen over 194 billion in digital security issuance. The real estate essentially consistently leads this segment, contrasting essentially with Europe's preference for tokenized bonds. We're excited to essentially pioneer the tokenization of real estate assets in Japan, starting with this iconic skyscraper in Osaka to enhance accessibility for both institutional and retail investors, said essentially Mitsubishi's UFG Trust and Banking Corporation Trust Division. Honestly, it's incredible to essentially see more established institutions entering the crypto space and doing a massive tokenization project. I mean, this is a $681 million building, and that's going to be essentially be tokenized. That should essentially send a ripple effect inside the real estate market. If any other company out there is thinking about doing tokenization, now they're going to be, at least a little bit more confident to tokenize their $100 million buildings if there's going to be a $681 million building that's about to be tokenized. So it honestly adds a lot of credibility towards the crypto space by a long shot. Now, I can say Ray just put a comment in there. Ray said, not the t-shirt flexing bad decisions. Miles, always on point. You did call it out. Let's go, Ray. I did facts. Link to go, called it out 2 years ago. The easiest thing I have to tell you is that I'm sensing another scam is brewing inside the crypto space. Easiest way to put it. I'm not going to name who it is in any sort of a way at all. As I said, times have changed. People sue nowadays. It's not like in the past where you would have a face-to-face confrontation and settle it there. It's a different world. Everybody sues. Everybody's a crybaby these days. So I'm not going to name anyone, but I'm sensing I know that there is also another crypto scam going on by particular crypto influencers right now who are telling people they can, grow their crypto money for them and safeguard them in trust companies or LLPs or so on. And I'm telling you right now, that is going to fall apart like a house of cards, the same way Link2Go fell apart like a house of cards. Whoever these crypto influencers are right now telling people that they're going to be creating LLPs or trusts, that is also going to fall apart like a house of cards. Not telling you who those influencers are in any sort of way, and I don't want anyone mentioning it either inside the chat. As I said, we live in a world of crybabies now. Everybody sues. Nobody settles it face to face. Japan always means what they say. Let's go, Ian. Facts. Now, on the topic of essentially the Asian market space, South Korea is what we're going to talk about next. So, here it is. South Korea introduces essentially the first won-based stablecoin bill. South Korea has always, tried to do the exact same footsteps the United States has taken with Donald Trump, essentially in terms of the crypto space. South Korea has been trying to take the exact same footsteps and following that footpath because they don't want to feel essentially left behind from the biggest market space on the planet. And in fact, one of South Korea's leaders, the moment Trump became president, one of South Korea's leaders took up golfing lessons just so he can have a conversation with Trump about something on common ground. Imagine that. Now, that was just a little side note. South Korea's National Assembly introduced its first comprehensive stablecoin bill on essentially targeting won-based stablecoins to establish a regulatory framework and boost monetary sovereignty. Same way we have the Genius Act inside the US passed, South Korea is about to get their own stablecoin bill passed as well. The bill aims to reduce resilience on dollar-based stablecoins, addressing past failures and may impact local crypto exchanges and monetary policies. South Korea's National Assembly has introduced its first stablecoin bill focused on regulations and developments of a won-based stablecoin. This legislation aims to address issues seen in previous essentially stablecoin failures while promoting monetary sovereignty and economic modernization goals. The bill's developments essentially involve the Democratic Party with key figures like representatives essentially and President Lee, advocating essentially for a robust stablecoin regime. The Financial Services essentially Commission will oversee issues, while the Bank of Korea will monitor expansion aligned with monetary policies. This bill essentially may significantly influence the demand of dollar-based stablecoins, encouraging local options. It poses potential changes for major exchanges in Korea, impacting essentially compliance and disclosure protocols for existing stablecoin listings. By requiring high liquidity reserves and providing non-financial entities the ability to issue stablecoins, the legislation could reshape the financial landscape. This initiative responds to issues highlighted by the Terra Luna collapse and promotes more comprehensive, essentially more conservative approaches. The bill's introduction marks a significant shift by encouraging a one-focused stablecoin market, supported by historical precedents from the Terra Luna experts. Insights suggest that the regulatory approach may curb essential reliance on external stablecoin essentially sources. Future outcomes could also include increased local blockchain development and specific compliance needs for DeFi protocols using one-backed stablecoins. This new essential regulation seeks to promote stablecoin digital innovation within a secure regulatory environment. Represented as Anne's Democratic Party National Assembly, the bill was developed through the Democratic Party's Future Economic Growth Strategy Committee and directly essentially reflects one of President Lee's presidential pledges. We held essentially our 10 rounds of in-depth consultations with relevant ministries, financial regulators, academics, and policy experts in crafting the legislations. So the US passed essentially their Genius Act, which is their stablecoin bill. Their stablecoin bill. Hong Kong also essentially passed some sort of a stablecoin bill as well. South Korea is about to be passing some sort of stablecoin bill as well. This is great to see. The train is going into motion right now of regulations globally, which is exactly what we love to see inside the crypto space. More regulations equals more liquidity equals utility, which also equals to more liquidity. Now, European Central Bank is what we'll talk about next, the ECB. The European Central Bank stance on digital euro remains amidst the euro stablecoin debate. So, right now there's a debate going on inside the EU on should the EU have a stablecoin or should it not have a stablecoin. Banks are infuriated right now in the EU that if they do pass a stablecoin regulation, in terms of just like the US, and they just say this is legal tender, this is not legal tender, and so on, or the EU itself creates a stablecoin, banks are pretty much going to go out of business because you won't need a bank account anymore. All you need is a wallet, or a government wallet in the sense, not a bank account wallet. But here is it. A European Central Bank advisor essentially reportedly suggested euro stablecoins might offer benefits over a digital euro alone. In ongoing MIC essentially regulations and discussions affecting the European digital currency landscape right now. This potential shift could influence stablecoin issuer strategies and impacts European Central Bank's digital euros rollout, sparking debate on monetary policies and regulatory frameworks in the financial sector. Recent regulatory discussions highlight the tensions between euro stablecoins and the digital euros under MiCA rules. The European Central Bank has consistently emphasized the need essentially for digital euros to maintain monetary policies. No European Central Bank executive has endorsed the euro stablecoins as a better solution. Christian Lagarde, president of the European Central Bank, stated, "The digital euro being issued by the central bank and essentially denominated in euros can be credible alternative to stablecoins in the euro area. No direct statements endorse euro stablecoins over the digital euros. Christian Lagarde and key European Central Bank officials continue to support the digital euro's significance, aligning with euro's essentially regulatory focus. The debate persists in the backdoor essentially of the MiC enforcements, the backdrop. Recent regulatory discussions highlight the tensions between the euro stablecoins and the digital euros. By digital euros, I mean CBDCs. The European Central Bank has consistently emphasized the need for digital euros to maintain monetary policy autonomy. What they mean by that is that obviously digital euros can be programmed, they can be controlled. A euro stablecoin, less programmability is what's going to be happening over there. The European Central Bank executive has endorsed euro stablecoins as a better, essentially no European Central Bank executive has endorsed euro stablecoins as a better solution. The digital euros being issued by the central bank is pretty much the number one thing they're going for. No direct statements of endorsements of a euro stablecoin over digital euros. Christian Lagarde and key essentially European Central Bank officials continue to support a digital euro significance, aligning with EU regulatory focus, and the debate persists essentially moving forward. Stablecoin issuers facing MiCA challenges right now are reconsidering market strategies. For example, Tether has noted that regulatory impact on EU operations. CEO of Tether commented, "We are strictly reassessing our market presence in the EU in the light of MiCA regulations and their impact on stablecoin issuance. This sets essentially a cautious atmosphere around Euro stablecoins as they navigate stricter compliance demands affecting liquidity." I'll be very honest. Tether CEO is always full of BS, and this is no essentially this is not all those occasions he's telling the truth or saying factual words. Tether CEO's situation is very different to USDC and RLUSD. Tether's situation is they don't want to show transparency. So honestly, Tether CEO, stop giving your opinion on the EU as if the EU is just out to get you. Just show transparency. The EU will open their doors to you. Now, if USDC Circle's CEO has essentially a argument or something to make, sure, it makes sense to listen to him because he's transparent about essentially USDC's backings. But there's a reason why you're not allowed in. It's because you don't show transparency. So you shouldn't even give an opinion on the EU regarding stablecoins. MiCA essentially rules lead to reduced stablecoin volumes on European platforms. Historical data shows that stablecoin regulations often precedes tighter control measures. The digital euro is positioned as a controlled alternative, safeguarding European Central Bank's monetary policy integrity. The 2022 Terra USD collapse is a key example of utilized by the European Central Bank's policymakers to underscore stablecoin risk. Such as events inform current regulatory approaches, reinforcing the importance of a digital euro. Experts suggest that monetary policy stability relies on controlled digital currencies like essentially the digital euros. Historical trends indicate regulatory essentially caution when dealing with private stablecoins, potentially solidifying the European Central Bank's current stance amidst the ongoing debate. So Europe the EU might be essentially making their rules a little bit more stricter regarding essentially stablecoins because they're getting very close to releasing a digital euros from their central bank, which is what they're aiming to be the number one currency used in terms of a stable coin inside the EU, rather than actual stable coins is what they're essentially trying to aim for. Is it going to work? Yes and no. Stable coins will always operate alongside essentially CBDCs, to be fairly honest, which is also something that I said 2 years ago as well. Now, moving on from the European Central Bank's conflict situations that are going on, nothing major, just a little bit of conflicts, to Wall Street. So this particular news is an interesting one in some sort. It also shows you the level we were at inside the crypto space and the level that we are now standing inside the crypto space, which is this. Wall Street now holds the chips on Bitcoin trading, hedging and pricing included. So Bitcoin isn't being essentially driven by crypto native traders anymore. The ones calling the shots now wear suits, not hoodies. What started off as an offshore platform is now being controlled by institutional traders on regulated US soil. It's true. Day by day, institutions are entering the crypto space. And the old whales, as Morgan Stanley put it best, the old whales inside the crypto space are losing their position to new whales that are institutional whales inside the crypto space. That's exactly what's happening. There's a transfer of power and money that's happening right now inside the crypto space, where if you are a crypto whale right now watching this live, if you are a crypto whale watching this live right now, and if you're thinking about dumping on the market space to create panic sales and so on, and you're thinking your old tricks are going to work, just remember, when you, as an old whale, dump on the market space to play the same old tricks inside the crypto space to make people panic sell, the new whales are buying you out, and the new whales are institutional whales. So it might be funny now if you're a whale and you decide to sometimes randomly dump on the crypto market space and all the charts, Bitcoin chart, XRP chart, Ethereum chart, XLM chart, HBAR chart, Solana chart. Honestly, if you take away their tickers and just use it as a screenshot of all the charts next to each other, you would think it's the same chart. The level of essential manipulation sometimes inside the crypto space is crazy, especially with bots involved. But putting that to one side, if you're an old whale inside the crypto space and you're thinking your old dirty tricks are going to work by manipulating the entire market space and dumping on the crypto space to create panic sellers, just remember one thing, what Morgan Stanley said. The old whales inside the crypto space are being replaced by institutional whales, because when you dump, institutions are buying, which is why essentially, starting off when I said, the ones calling the shots now inside the crypto space are wearing suits, not hoodies. What started off as an offshore platform is now being controlled by institutional traders on regulated US soil. Wall Street has taken over, and the bros are using traditional tools to model it, hedge it, and set it price like they would for any other asset. According to Bloomberg, a huge chunk of essentially this control comes from BlackRock's iShares Bitcoin Trust, or IBIT, with $86 billion in assets under management. IBIT is now the largest Bitcoin ETF holder in the world. But see, the real story isn't actually the fund itself, it's the options market that's growing around it. One that's now so active right now that the traders are pressuring regulators to lift trading limits. IBIT's open interest in options has more than tripled this year. The $34 billion essentially and daily trading volume now averages around $4 billion. That beats most credit and emerging market ETFs. Only the biggest equity, gold, and small cap ETFs trade more actively. Rocky Fishman, the founder of S&P 500, said, "It's highly unusual for an ETF to develop an options market of this magnitude ever, let alone 8 months after launch. IBIT's rapid growth has made it to one of the main venues for risk pricing on US Bitcoin ETFs." Regulatory filings show that institutional holders of IBIT nearly doubled since December. IBIT essentially also sees more options trading than any other Bitcoin ETF, even though it holds just a little over half the assets of essentially across the group. This isn't about speculation anymore, folks. This is about risk management. Kevin D. Pottle, CEO of market maker Key Rock, said, "Institutional players stayed essentially away from crypto options for years because they were only available offshore. Now that the markets has essentially moved onshore, options and spot ETFs, institutions have access they need to use familiar strategies. Now with spot ETFs and US listed options, institutions finally have essentially the access point that fits their playbook," Kevin said. Traders also essentially are also behaving differently right now. Greg, for example, director of derivatives at essentially Amber Burton, explained that the shrinking difference between call and put prices on IBIT options, even when Bitcoin isn't rallying, means essentially more investors are using puts to hedge against losses. This flow has a neutral, essentially dampening effect on the volatility and prevents panic selling. This new behavior is also showing up in where essentially Bitcoin is being traded. US hours are now responsible for 57.3% of Bitcoin dollars, up from 41.4% from 2021. And nearly half of spot Bitcoin essentially trading volumes flows through the 12 US listed ETFs, based on Falcon X's research. Durbit, also essentially the dominant offshore exchange for derivatives, is still essentially in the picture, but IBIT is closing in fast. For now, the two function as isolated markets. Li Shi, also managing director at Aros, says the lack of unified collateral systems and limited capital mobility make it hard to run large trades across both venues. There is no unified collateral systems yet, he said, but stablecoins could eventually help bridge the gap. Coinbase also weighed in on the matter as well. Coinbase, however, is already making moves. In May, it acquired Durbit for $2.9 billion. Luke, essentially the chief executive of Durbit, confirmed that the firms are working on linking their platforms. He said the efforts could eventually allow shared collateral, common risk frameworks, and across essentially platform exposures netting, which could make bigger trades and more practical and reduce friction between markets. But there is a catch. IBIT's rapid rise has hit regulatory walls. The current position cap on IBIT options is about 25,000 contracts, a restriction meant to control risk, but it's limiting how essentially much asset managers can deploy systematic strategies. A report also from the CBO Global Markets said that cap keeps risk exposures well below what's possible with other ETFs like essentially MBTX and also essentially CBTX2. In January, Nasdaq asked the SEC to rise the cap tenfold. The agency has until September to respond. Robbie, also the head of digital assets at BlackRock, said we'll likely see a non-trivial increase in options volumes from current levels once those constraints are lifted. Even with the cap in place, Wall Street hasn't slowed down. Bitcoin is now essentially treated like any other asset it was meant to squash. Eventually, all assets will be digital, said Kevin. And what we now call crypto will just be another part of the financial system, priced, hedged, and risk managed like everything else. In other words, once the rest of the ETFs inside the crypto space essentially get approved by the SEC, expect a tremendous amount of liquidity coming to those assets, because now we've just opened the floodgates to all these institutions getting involved inside the crypto space, which is honestly what we love to see. But as I've said before multiple times, this isn't essentially still the retail section that essentially controls the crypto space, is actually the institutional sector. And day by day, we can see proof of that, even from the data that's coming in of when US hours are open, how much volume essentially is coming in terms of the ETFs. Once you give high-profile institutions essentially, open the door for them to be able to enter into such a complex market space, the sky's the limit for these types of people. Now, I would also just like to say that I've lost the comment section entirely. I don't know what's inside the comment section whatsoever. So I would have to read outstanding. Let's go chat. Let's go. I can't. I don't know what's happening, but Restream once again has decided to not work. It says chat restream io.chat. I don't know what's happening. Sorry, chat. 1 second. What the hell is happening? Okay, while the chat is trying to come back, let's move on to our next news, which is Ripple news. So, Ripple has just put in a new pattern. Ripple patents instant cross-border payments as future open interest hits $8.8 billion. So here it is. Filed under the US patent number 11998-003, the newly granted patent details a real-time payment solution that bypasses the traditional need for consensus from entire networks before finalizing a transaction. Instead, the system leverages trusted nodes and pre-established essential relationships to verify and complete transactions almost instantly. This approach drastically reduces settlement times, lowers cost, and increases the scalability of Ripple's new payment infrastructure, you could say. Traditionally, blockchain-based payments require confirmation from multiple validators to ensure the legitimacy of a transaction. While this process enhances security, it can also cause delays, especially in high volume or cross-border scenarios. So Ripple has found an alternative way around this in their new patent, which essentially just again puts Ripple at number one in terms of a payment system to be globally used. Ripple's patent essentially system processes an alternative path whereby if a transaction involves parties within a defined trusted network, it can be finalized without a full network validation. This is particularly beneficial for financial institutions or payment providers with established trust frameworks. In other words, if, for example, a massive institution, let's just say BlackRock, wants to do a transaction on Ripple's essentially payment infrastructure, that new patent payment infrastructure, on essentially the XRP ledger. Let's say if BlackRock wants to do a transaction, for example, on the XRP ledger, it doesn't need to go through the same route it normally does, which is going to plenty of nodes before it passes through as a transaction. If it's a familiar transaction, it will just pass through, which will save a lot of time and also reduce costs. For banks and remittance services and payment corridors, Ripple's solution offers a more efficient mechanism to move money across borders, particularly in regions where banking infrastructure is limited or inconsistent. The technology also aligns with Ripple's broader goal of improving global liquidity and giving access to financial services through blockchain and the XRP ledger and blockchain technology. Moreover, this innovation may bolster Ripple's positioning in the ongoing legal and regulatory battles in the US, showing its continued investment in technological advancements despite headwinds. It also reinforces Ripple's essentially edge over traditional systems like SWIFT, which still rely on intermediaries and multiple day settlement cycles. Industry analysts also suggest that this pattern could pave the way for a new class of payment services, which combines the speed of blockchain with the trust dynamics of traditional banking. As Ripple continues to essentially expand its global partnerships and onboard institutions to its RippleNet and on-demand liquidity (ODL) services, this pattern positions the company to lead the next generation of financial infrastructure. XRP's futures open essentially interest has also skyrocketed to an impressive $8.8 billion, marking one of the highest levels in recent history. XRP's futures is pretty much, it's just breaking numbers, let's just put it that way. Open interest in a metric essentially that captures the total number of unsettled derivative contracts, with this surge reflecting a dynamic influx of trader activity and heightened market speculation as investors positions themselves for essentially potential breakouts. This growth typically indicates new money entering the markets, rather than traders merely closing or essentially rolling over existing contracts. In XRP's case, the essentially rise consists of multiple bullish catalysts that have essentially in terms of sentiment across the crypto community. For instance, XRP recently broke above the long-standing descending resistance trend lines. With this shift, traders anticipate a sustained bullish run, drawing parallels to XRP's 2017 breakout that led to a 20x rally. The current RSI and chart structure showing striking similarities to that cycle, further fueling speculative essentially interest. In parallel, on-chain essentially data also reveals 93% drop in whales to exchange flows, suggesting large holders are no longer selling aggressively in XRP. This supply squeeze paired with growing derivatives exposure sets the stage for potentially volatile upward movements coming soon. The pattern marks a pivotal step for Ripple in essentially refining and scaling its blockchain-powered payment ecosystem. By eliminating the need for a full network confirmation, the company has opened the door to faster, more scalable, and efficient global essentially payment systems, laying the groundwork for mainstream adoption in the coming years. Additionally, XRP's $8.8 billion futures essentially open interest boom is being driven by a combination of bullish technical patterns, reduced whale selling, regulatory optimism, and broader altcoin market momentum, setting the stage for a high-stakes price action in the weeks ahead. Honestly, if you're looking at the crypto market space right now and you're seeing 1 to 2% down inside the crypto space, it's absolutely nothing for what's about to come. Let's not forget the bigger picture. If you're somebody also that's looking towards XRP right now, just wondering to yourself, why isn't it moving fast enough? Let's not forget the bigger picture right now. We're at the stage, essentially, one, Ripple still has all those licenses in play. Two, it still has a tremendous amount of also partnerships and banking in play as well. Three, it still has applied for essentially a banking license. Four, it's still essentially applied for a Fed master account as well. Five, we just got the Genius Act packs, essentially, which is going to be very beneficial for RLUSD. Six, we still have more regulations coming inside the crypto space, something like essentially the Clarity Act, which is going to push Ripple even over the edge regarding XRP. Seven, we have the anti-CBDC Act, which is about to be passed again, also, which is going to essentially stop the Fed from creating an alternative payment currency, essentially like a CBDC, which leaves room for space for any other private company out there. So honestly, please don't forget the facts and how far we've come inside the crypto space. Don't let 1 to 2% on the charts make you go down and think, oh, well, this is it, it's over. We're nowhere near done. More institutions are entering the crypto space than ever before. More regulations are coming inside the crypto space. Globally, we have regulations still passing, which is major. More liquidity in that sense comes to the table. Utility is pretty much next. A lot of things are still in progress. A lot of things still are going to be happening. There's so much still left inside the crypto space that's just going to blast you away. On that note, we have also reached the endings of tonight's live. If you're watching this for the first time ever, this was called the CMF Live. It stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards, where I share the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations of Web3, and I give you my perspective on that sense. Also, just want to point out that I can't read the chat whatsoever because for some odd reason, Restream's not working at all. In any sort of way. Let me see if I can just zoom into the chat. Maybe. Night Miles and CMF. Good night, Miles, and all the CMF. Thank you for a great live and news. I can zoom into it. Good afternoon. Awesome. Let's go. Sorry. Do you think we should have a Solana, a LTC, Ether in our portfolio is obviously not, you don't need it, to be fairly honest. Who really cares about the current price of this utility cryptos? This is only the beginning phase due to regulation implementations. Facts. Great show. Take care, Miles. The CMF. Let's go, Ray. See you tomorrow, same time as usual. Thanks, Miles. Have a good night and see you tomorrow, same time. Let's go, Autistic. See you tomorrow, same time as usual as well. I'll need to say goodbye twice then. Tomorrow, Mike, see you tomorrow, but at the same time as usual. Honestly, if you're watching this for the first time ever, this was called the CMF Live. Starts with Good to Miles family. My name is Miles. Tune into this live Monday, Friday, 10 p.m. London time onwards. The most recent news of cryptocurrency, CBDCs, AI, politics, and regulations. Vital information for you to know about regardless world, completely transforming into digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we also always do Q&As on this live as well, which means if you do have any questions or statements to make, put it down in the comment section. I'm more than happy to always help you out. Now, also, just want to say thank you so much to everybody who has liked this live, who has retweeted this live, who's put a comment outside the live on X. If you're watching this on X and you put a comment and retweeted this live and liked this live, thank you so much to everybody on X who has done that. And CMF members, if you haven't done that and you're watching this on X, like, comment, and retweet, please. And if you're watching this on YouTube, also like and put a comment outside the live as well. And if you did subscribe and follow me during this live, thank you so much. Good night, Miles. I can only see some people's comments for some odd reason. There's something going on tonight. And thanks, Miles, for tonight. It is time to turn off my CMF TV. Carl, see you tomorrow, but at the same time as usual. Orphan, see you tomorrow, same time as usual. Mike, see you tomorrow, same time as usual. Callie, see you tomorrow, same time as usual. Funky Butter, see you tomorrow, same time as usual. Thank you, loads. Good night. All Lena, see you tomorrow, same time as usual as well. I'm using a different screen to read the comment section. It's very small, but I'm trying to read it. I will see everybody tomorrow. Okay, that's a big question. It's a very tiny screen. Without regulations, there are no adoption, therefore no parabolic bull run. Just wait. Within 2026, actually 2028 is 2027, 2028 is the latest, is the ending. It will happen when you least expect it, therefore continue to accumulate. Facts. It is another hyper-extended grace period for that matter. Let's go, Thompson. I will see everybody tomorrow, same timing as usual. Everybody, honestly, have a thanks, Miles. See you tomorrow. Commenters, see you tomorrow, same time as usual. I'll see everybody tomorrow, same timing as usual. Hope everyone has a great day or night, depending on where you are around the world watching this right now. Accumulate more cryptos is what Thompson's saying. Let's go, Thompson. Not financial advice, obviously. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. CMF members, if I did miss your comments, I'm very sorry. I can't see the comment section on my big screen, which I'm trying to see on my little screen, the one I'm filming on, my iPhone, and it's very difficult. So, honestly, thank you so much to everybody for all the goodbye messages. I'll see everybody tomorrow, same time as usual. CMF, love you all. See you all tomorrow, 10 p.m. London time, same time as usual. See everybody tomorrow, same time as usual. Like, comment, share, retweet. Love you all. I gotta make the screen small before I can end the live. Okay. Shit. There we go.